when you look at not only our numbers, but the numbers of all our competitors, you see that we are all between 9 and 11%. And the prospects for the time being are pretty good. And when you look at the orders for TV, for internet, it is still pretty crowded. So we don't see immediate signs, but as I said, things may change overnight. Yeah. For the time being, we are quite cautious, but the business is strong. I would say stronger than in the last few years, not only for us, but for the whole industry. And we feel that the situation is not going to change overnight. We believe that Q2 will be good for the industry, and we believe that for the time being, we are having a year which will be comparatively to last year, still pretty good.
Let me ask you, though, about sectors, because here we just sat here and we read a couple of stories about the technology sector which indicate a very significant and rapid change in expectations for these businesses and for the way that they're being viewed in capital markets. Technology companies have been a terrific source of advertising revenue in recent years as we've had these new businesses start up. Are you worried about that sector in particular in terms of generating still strong revenue growth?
When you look at the sector and you see that there is some stock price who are going down and falling in a free fall, you should look also at what people are expecting. It is a sector which has been growing by 30 to 50%. And when they are growing only by 25% or 15%, there is a disappointment, and then you see the stock sinking. So we should not take that sector as a barometer, because expectation in tech is very high. So when you have a double-digit growth with 20%, which is huge, it is a disappointment in that sector. So we have to be relatively calm when we look at those numbers, and with a longer view. For the time being, when you look at the telcos and you look at all the people who are investing in advertising, the numbers are still pretty good.
In terms of the factors which could drag the economy down and that outlook down as well, we've absorbed some extraordinary factors over the last couple of years. But actually, I think the markets and companies have absorbed the war in Ukraine very, very well as well. Do you have concerns that there's something else out there that is an outlier that could actually drag the outlook down? Or actually, is it just the things we already know, such as inflation, such as interest rates?
The problem is that we are living in a permanent crisis. Since a few years, since in fact the beginning of the new millennium, we had the 9/11, then we have the subprime, then the economic crisis, the financial crisis, the pandemic, and now the war in Ukraine. So companies are used to adapt and to change and to make very fast decisions when they are confronted to crisis. And this is a huge change compared to the years of the 90s or before, where a crisis was taking aback almost everyone. So we are pretty quick to adapt. We are pretty quick to make some strong decision, protecting the people and protecting cash and the activities. The key issue today is what will happen with war in Ukraine. And will it be something which will last in a way which will be a little bit frozen, and a kind of peace which is not peace, war which is not war? Or will they continue at the same rhythm as today? if they continue at the same rhythm as today, we can expect that there will be shortage of cereals, wheat, oil, gas, everything. And we can expect that price will go up dramatically and inflation will be hard to contain. If things are mastered or the situation is slowing down a little bit, I think that mastering inflation will be, I wouldn't say easy, because inflation is never easy to control, but will be manageable.